how to choose a currency cross. That's the topic of conversation here today. Currencies are heating up for the first time all year, it seems. We just saw to start 2021 more of the same from last year, which was US dollar weakness and slight strength in the British pound, euro, and a couple of other currencies there. We've seen the dollar bounce, and we've seen some turbulence in those other currencies. And remember that relationship for most people's trading platforms and their experiences is usually either, euro, sterling, yen, Mexican peso or Canadian dollar, Australian dollar against US dollar, or US dollar against all of those other things. So when one shakes up, the other usually shakes up as well. When one does well, the other one usually does poorly. And so we're finally seeing some two-sidedness here as we've seen that US dollar bounce. We've seen some of those foreign currencies move around a little bit to the downside. And just last week, we actually saw the US dollar turn around. And now we're in this nice middle ground of it's not just US dollar weakness or US dollar strength. We're seeing both of them in a matter of a few hours or a few days, which creates for great opportunity. But a big hang up becomes, how do you choose the currency cross you want to trade? A lot of people have opinions on where US dollar is going, where Australian dollar is going, where the euro is going. But then you have to get to that platform. You have to get to wherever you trade and figure out, which of these crosses should I be trading? What size should I be trading? Where do I start here? And that's what we're going to dissect a little bit today. Before that, I got another thing to plug. If you want free market commentary like went out this morning, free to everybody who goes to go.smallexchange.com/light-confirmation. You can get our newsletter Light here. And every week we send out a nice little article with a little bit of data and context for an asset class that is moving and for some potential opportunity. And we zeroed in this week on choosing a currency cross because the dollar is starting to pick up and you're seeing some back and forth in British pound and Australian dollar. Those two are kind of the two volatile pieces here, but also that Chinese renminbi and some other things. And I talked about this a little bit in terms of the Masters that actually just came to a close yesterday. Congrats to Hideki Matsuyama. A great win there. Wasn't really ever in contention, which made it kind of boring for us viewers, but good for him and the country of Japan to finally get a major golf win. But going into the tournament, I feel like is the same way a lot of people trade going into executing on a foreign exchange idea, which is I've got this idea, I've done this research, or I have just like in my everyday life, I've come across some ideas that are like, man, it looks like that US dollar might really weaken, or it looks like that euro might really go down, or, the Chinese renminbi might go down. And then you get to your platform and you're like, oh man, there's a ton of currency crosses. Which one am I supposed to trade? Am I supposed to trade the yen against euro, yen against US dollar against yen, or US dollar against a basket of currencies? It's similar to, you got the Masters coming up. You think the person who has the best irons is going to win the tournament. Well, guess what? There's like 50 guys who are good at playing, the top in the world at playing with their irons. The same with, driving distance is going to be the best performer here at the Masters. Guess what? There's a top 5, a top 10 there. If you pick one, you pick the top guy in driving distance, you still have really low odds, even though you picked the top guy there. It's similar with these currencies. You've got an idea on currencies, and if you pick just one, you might be right about where the US dollar is going, but maybe you picked the wrong one and that person didn't win the Masters that weekend. So a very interesting piece there. Like I said, go to go.smallexchange.com/light-confirmation for some free market commentary. If you're already signed up, you're getting these every Monday in your email mailbox there this week, talking about choosing a currency cross. And this is a little bit of that problem that I was trying to convey. And it's honestly similar to probably one of the first times that you came to trading stocks or options, which is I have an opinion. I think that stocks are going up or down. I've crunched some numbers, or I've done my own research on fundamentals, or I've read some papers on all this stuff, and I'm ready to package it together into an idea. And you get to the platform and it's like, Okay, well, would you like to put that idea to Apple stock or Amazon stock or Microsoft stock or maybe an energy stock, Exxon or Halliburton? Or, there's so much to choose from, which is great for those people who are advanced traders, people who've been around and seen these things on a daily basis for years and years and years. But when you are trying to come to a fun market like foreign exchange and you see the Chinese renminbi, the euro, Mexican peso, Great Britain pound, Japanese yen, and Canadian dollar there, it's like, man, I had an idea on US dollars here on where they were going or where just at large the foreign exchange landscape was headed. And now I got to choose one of these. And if it's not the right one, my performance is not going to be as good as it could be. It might actually be negative if my idea is still correct, if you choose that wrong cross. And so the first thing that you do, and this is what I actually did, I put a little bit of money on the Masters this weekend, just a little bit, because I wanted to have something to root for. And I did what I would advocate for when starting out with currencies, which is like, I have an idea, I have like a general premise here that I'd like to execute on. Let me do it in a couple of these markets so that I don't miss out on the move. And right there, you're starting to kind of create a basket, right? Like this weekend, I thought the people with the best irons were going to do well. And so I put a little bit, instead of putting $50 on one guy, I put $5 on 10 guys that were in that top 10 of that category. It's similar with this, it's like, okay, I had this idea on the foreign exchange landscape at large. And instead of just buying Canadian dollar, I can buy Canadian dollar and Mexican peso, two North American currencies there. Or, I had some idea on Asian currencies in general. Well, there's the renminbi and the Japanese yen, and then also that Australian dollar, which I know Australia not a part of Asia, but usually a good proxy for Asian currencies there. Same with Europe. A lot of people bundled together their ideas on Europe at large in that Eurozone currency and the pound. So, say you thought that European currencies were going to appreciate relative to US dollar, instead of just betting on the euro and then seeing, the pound actually outperformed the euro, but I only bought euros, you could spread that out a little bit, diversify, and start to create a basket. Same with stocks, and this is one of the first things that I think most active investors are taught, which is you have an idea on technology stocks. It's going to be a lot better for your portfolio, and that just means a lot less volatile for your portfolio to, instead of putting $100 on Apple, put $10 on Apple, $10 on Amazon, $10 on Microsoft on down the line there, so that you don't miss out, and so you diversify against something specific that could happen to Apple, because that's the last thing you want, is to have an idea on European currencies or Asian currencies, and you bet on one of them, and your idea is confirmed in the marketplace, but the one that you chose, something specific happens to their central bank or a data release that comes out of their country, and it's like, I didn't want this one-off specific risk. So what do we do from there? Well, one step further is actually what the small exchange has already done for you, which is create a full-blown basket of currencies. And this is a great starting place, I think, for people who are looking at foreign exchange on a day like today. US dollar getting hit again after last week's rough ride for the US dollar. And the news items start to circulate, the media starts to pick up that there's something going on in currencies. And you have a product with SFX, the small US dollar, that already has this full basket of currencies built for you, similar to S&Ps or NASDAQ. You read a report on, oh man, like it looks like we might see some volatility in stocks. It looks like the stock market might take a hit in the next day, next week, next month, whatever your horizon is. Usually you don't want to you don't pick one company to put that opinion to work. Same here. You don't want to put one currency to work here. And so we created the small US dollar, which is US dollar versus this handful of currencies that are right in front of you on the screen here. And that makes it at least a very simple starting place. Of course, as you get more into foreign exchange and everything else, you do more research, you become more comfortable with the trade, then you can start picking out you know what, I'm going directly to the euro versus the US dollar, or I'm going directly to Australian dollar versus US dollar. And you can start getting, as you get more comfortable, get more particular with your trading. But a great place to start. And it's a small future as well, margin just under $200. The product itself is a lot smaller than the traditional currency futures. Really good place to begin your journey when you are putting together an idea into a foreign exchange trade. So, how do you choose a currency cross? Well, whether you're looking at price action, fundamentals, or whatever your opinion might come from, it's really simpler to start with a basket. Of course, you can get more specific as you get more comfortable in this space, but I would advocate when looking at what currency cross to choose, not choose any of them. Just choose a basket in the same way you go to the S&P or the NASDAQ instead of choosing a single stock. And the small US dollar has that exposure for you.